Traders, good morning. Welcome to the DOS Trader morning call video for Friday, November 13th. What a nice day we had yesterday. Yesterday we came out in the video stating, look out guys, I think we move lower before we go higher. Why? We were looking at certain patterns here. We did have conflicting patterns, but I did say that we're looking for lower prices before we go up. Now we had this big bearish rising wedge here, and then we had this little bear flag, and on a 60-minute chart, we actually showed a bear flag, and this could have been, before you put this aside, could this have been a bull flag instead of this bearish rising wedge. So we had some conflicting patterns, but I said, you know what, I think we go lower. Sure enough, we had a nice big push to the downside. Nothing has changed, guys. We had this big move up here only because Mario Draghi had said we're going to initiate QE and continue to initiate QE. Markets rally really hard. China is in really worse shape than ever. We have our two leaders. We have the transports moving lower, or at least sideways and not leading. And, of course, the IWM, which is the Russell 2000, great gauge of risk. And I'm going to show that to you in the charts again, lagging as well. Not a good sign. What happened yesterday? Well, really based a lot of selling has happened on crude oil. And as you can see here, crude oil, WTI, has broken now a head and shoulders pattern. You can see here your head, left shoulder, right shoulder, and we're starting to move lower here. So not a good sign that energy's starting to move lower as well. Retail sales on the retail numbers are taking it on the chin. So the retailers are getting hit hard. There's a lot of bad stuff going out there, guys. You got to be real careful. We got a lot of emails saying, oh, well, you know, Mark, what do you think about this Santa Claus rally? Is it going to happen? Well, I think it's a little too early to tell. But if you take out the 204 and you take out 200, which would be 2,000 in the ES, then I think you're going to have a bigger and deeper downside correction, okay? So let's just keep an eye on things. Today is Friday. Now, we do have options expiration monthlies come out next week where we do put in some sort of an interim low, either yesterday or today, and then we kind of chop around for a couple days, and the path of least resistance generally is up. So let's keep that in mind going into next week. I'm still going to be a seller of rallies today. You know what the downside targets, 204, break below that, and then to 200. ES would be the 2040, and then, of course, the 2000 if we take that. Sorry about that, the SPX, that's the cash, and then 2000, then look out below. I think we actually go a little bit lower, okay? So just keep that in mind, guys, going into next week, but I am going to be a seller of rallies for now. Let's take a look at the 60-minute chart, and this is why I like to dial down from a daily to a weekly. And a DOS Trader charts are showing me really nice and clean. You can see that higher highs and higher lows, big bearish rising wedge. We broke that, we back tested it, and that's what kind of told me that I think we're going to go lower, and that is not a bull flag forming in the daily chart of the S&P. And sure enough, that's what happened. So nice little move, caught that nice move yesterday, and let's see what happens today. It's really going to be interesting. Here's the diamonds, and remember, this is our lagger. This is a lagging index. The Dow Jones lags the other five that we follow, and sure enough, this was leading, so not also a good sign as well. This was forming a bull flag here. You could see that, and that broke down as well. Okay, take a look at the transports, and I put a Bollinger Band here to show you that we are really, really starting to tighten. That means that we're going to have an expansion of volatility, and we don't know which way it's going to go, but right now it's giving us a hint. We're starting to move low. We could see that curling up and down. This price is moving lower. This is not a good sign. This is our main leader, guys, the transportation sector. When that starts to break down, fund managers and hedge fund managers are going to take notice. So just please keep that in mind, okay? This is not a good sign at all. This is our primary leader of the five that I'm showing you. Russell 2000, a great gauge of risk. Let me open up the DOS Trader here, the chart. And as you can see, it hasn't even broken the 38%. So why the Russell 2000 is important? Well, first of all, as we all know, it is a great gauge of risk. Risk on, risk off for traders and investors feel good about the market. That's number one. They tend to take on more risk. So that's why the Russell would move higher. Also, the Russell 2000 usually tops and or bottoms before the other four indexes that I've showed you. So this is really important. If the Russell 2000 continues to break lower here and takes out this little area of 112 on the IWM, the ETF, then look out below, guys. I think we're going to move lower as well because transports will follow. Banks and financials are not doing well. You could see that on the chart. And let me just bring that up here real quick. you could see now the banks and financials, the XLF, really hasn't done anything. Look at this. This has not done anything at all. Let me just bring this back in. Where's the rally in the banks and financials? Not a good sign, guys, okay? So we want to be cautious here. We want to reduce our exposure, and we want to be able to play for another day here. Lastly is the Qs. Yesterday I showed you on the video the top 10 holdings, and this is exactly what's happening. This is what's keeping the Qs of the NASDAQ 100 up. It's the Apples, it's the Google L, Amazon, Priceline, Microsoft, Gilead. Those are the ones that are keeping this index up, so it is a bit skewed. Don't get yourself fooled here, okay? If you're not trading the 10 that I mentioned, the top 10, you could be losing money by looking at the NASDAQ unless you're just playing the Qs. But just use caution here going today. Look for an interim low before next week, and then we'll have full updates for you next week. Have a great weekend, everyone, and we'll talk to you on Monday. Take care.